We are studying the sources of business finance. There are 4 parts in this, as we have discussed. Introduction to business finance, meaning, nature and significance of business finance, requirement of business finance and the sources from where it is mobilized, and methods of raising business finance. These are the 4 different subtopics which we are studying in this chapter. We have finished with introduction, a small introduction part, what is meant by business finance, the capital funds needed by the business to run the business is known as business finance. Then we have studied the second part, meaning, nature and significance. So it is estimating, raising, then utilizing and maintaining the capital funds needed by the business is known as business finance. Then we have studied the nature of it. It's basically a business activity. It is a goal-oriented activity. So it deals with estimating, raising, allocating and maintaining the business funds. Then we have come to requirement and sources. So when it comes to requirement part, so it is nothing much. You have to just remember why business needs business finance, because mainly there are 2 types of assets. One is your basic, the capital assets. In order to purchase those capital assets, which includes land, buildings, machineries, all those things, and also for the day-to-day expenditure and movable assets like raw materials and day-to-day expenditures and other expenditures like paying the salary, all those things. For meeting those, business needs finance. Then we have come to different sources. We generally classify the sources of business finance under 3 headings: based on time period, then based on the source of generation, and based on the ownership. So after that, we have come to the last part now. Anyway, just from the examination point of view, you can expect 1, 2 and 5 marks question from this second part. What is meant by business finance should be a 1 mark question, or mention any 2 features or nature of business finance should be a 2 mark question, and combinedly what is meant by business finance, explain its nature and significance should be a 5 marks question. Coming to the third part, requirement and sources. So don't expect any question from requirement part, but when it comes to sources, maybe a 5 mark or a 10 mark question. If you remember those 3 classification of sources based on time, based on the source of generation and based on ownership. If you remember those 3 and further down, so naturally you should be able to get the maximum marks. So if it's a 10 mark question, please just write the definition of all those sources. That's it. That should be sufficient, because that itself will run about 2 pages almost. So come to the last part in this chapter, the methods of raising business finance. Even though there are many methods, the syllabus, the first PUC syllabus, the PU board has decided to mention a few important methods of raising business finance. So we will be studying about shares, debentures, retained earnings, public deposits, loans, trade credit, discounting the bills of exchange, internal and external ways of raising the business finance. So I'll start with shares now. Shares. First one, from the examination point of view, you can expect a 1 mark question, 2 marks question and 5 marks question from this part. So first one, the meaning. What is meant by a share? That's the first question. What do you mean by a share? ನೀವು ಸಾಮಾನ್ಯವಾಗಿ ನ್ಯೂಸ್ ಪೇಪರ್ ಓದ್ತಾ ಇದ್ರೆ ದಿನ ಈಗ ಎಲ್ಲರೂ ಈಗ ಹಣದಿಂದನೇ ಬಿದ್ದಿದ್ದಾರೆ, ಎಲ್ಲರೂ ಶೇರ್, ಸ್ಟಾಕ್ ಮಾರ್ಕೆಟ್, ಮ್ಯೂಚುವಲ್ ಫಂಡ್ ತುಂಬಾ ಮಾತಾಡ್ತಾರೆ. Can anybody define what is a share? So share is nothing but the capital of the business divided into small equal parts having a definite face value is known as a share. I'll repeat it. Share is the capital of the business divided into small equal parts of definite face value is known as share. I'll take a simple example. Let us imagine all of us, we want to start a business and we need a total capital of 1 crore rupees. Now, I myself, let us say, I want to start that business and I want 1 crore rupees and I don't have that. So what I'll do, so before approaching or before thinking about the different sources of raising the business finance, what I'll do, I'll divide this capital needed by the business into small equal parts of definite face value. Now I'll take that each share of my company which I'm going to start will be having a face value of 10. So the number of shares multiplied by its face value will be equal to the capital needed by the business. Let us say if the face value is 10, so naturally I should be releasing at least 1 million shares, that is 10 lakh shares. Now what I'll do, I'll approach my friends now. I want to start a business and I need a capital of 1 crore rupees initially. So I have divided that share into 10 lakh shares with a face value of 1 crore. Now can you people help me? So buy some shares of my company and try to help me out in starting the business. So now let's imagine I have 10 friends here. They say, okay Vinay, I am ready to buy 1 lakh shares of your company. So 10 students or 10 friends of mine come and say we are ready to buy 1 lakh shares each. So here 10 people have purchased 1 lakh share each with a face value of 10 rupees. So naturally I'll be mobilizing that 1 crore rupee. So there are 10 shareholders to the company or business now who have paid 1 lakh rupee as initial equity share. So here, that's how generally companies mobilize the share capital. So that's the first basic point you need to know, what is meant by share. So in your examination, you just have to remember what is meant by share, that's it. So company's capital or the business capital divided into small equal parts having a definite face value. That is known as share. So generally there are two types of shares which you need to remember. Coming to types, we have two major types. One is known as equity share. The other one is known as preference share. So in this chapter, we will be studying both the types of shares here, equity shares and preference shares. So here, come to next one, equity shares. Equity shares are also known as general shares or common shares, where a company issues shares to the people who are willing to invest in the business. That's known as equity shares. So preference shares, we'll come to this later. So it is issued on preference to certain group of people, and they will be given preference even in paying the dividends and all those things. We'll study this preference shares later. Come to this equity shares. So here, that's a general type of share, what we have discussed now. So in your examination, the question what you may get here is, what is meant by equity share and what are the advantages and disadvantages, or what are the merits and demerits of equity share as a source of business finance. That should be a 5 marks question in your examination. So you should be able to explain that in a very simple way. So we'll come to that. Now, what is meant by an equity share? What are the merits and demerits of equity share? Let's have a simple recap. We are studying the sources of business finance. We started with the simple introduction, then meaning, nature and significance. Meaning should be a 1 mark question. Nature of source of business finance should be a 2 mark question. Combinedly, this should be a 5 mark question. Come to requirement and sources. Don't expect any question from requirement. Come to sources part, maybe a 5 marks or maybe a 10 mark question where you have to classify the different sources and just give the meaning, or which are those sources, you have to just give the meaning of that, that's it. So come to next one, the last and the important part of this chapter, methods of raising finance. So in your PU, the PUC board has decided to give all these as the important source of business finance. We'll be studying this. So we started with shares. So shares, there are two types of shares mainly, equity shares and preference shares. So now we are starting with the equity shares. What are equity shares? You can give the same definition what you have given to shares. Equity shares are company or business capital divided into small units of equal amount having a definite face value. Please use that word face value. Otherwise, the meaning or the definition for shares doesn't carry any weightage if you don't use that word face value. So it is dividing the business capital into small units of equal value having a definite face value is known as equity share. Now come to the features of these equity shares. So you may have to explain this if it's a 5-mark question. What are the features of this equity share? First and the foremost one, it's very easy to remember. Generally every business try to mobilize the funds through this. It's an important source of business finance. When compared to all other sources, even though it involves lots of procedures, but still it's an important source of business finance. That's the first major feature. So come to next one. If you remember, we have discussed about the sources where we have divided the sources of business finance based on time period as long-term business finance, medium-term business finance and short-term business finance. Come to this one, equity shares comes under long-term business finance. When I say long-term, the company or the business need not to repay this until the business or company is liquidated. So till the time company is in existence, so these equity shares will also be in existence. So it's a long-term business finance which generally need not be paid back unless and until the company is liquidated. That's another major feature of this. So come to next one. This is a permanent one. So permanent, again the same meaning, the company need not to repay this. So it will be there till the time company is there. Once when the company is to be liquidated, then only the equity shareholders will be paid back. Otherwise, there is no need of repayment for this. That's another major feature. Come to next one. There is no fixed dividend or interest for this. Company or business need not to pay any interest or any fixed dividend for these equity shareholders. That's another major feature here. There is no preference treatment is given for equity shareholders. When we come to preference shares, we'll talk about that. What is that preference? So preference is nothing but preference is given in paying dividends. That's it. So here for equity shareholders, there is no such preferential treatment given to them. So come to next one. Generally, equity shareholders are the owners of the company. Holding the equity share represents the ownership over that company. That's another major feature here. There is something known as limited liability. That's another major feature. When I say limited liability, a person who has invested in a company, in a business in the form of share, will have only limited liability to the extent of his investment. So here, in my example, you have, for example, I have invested only 10 lakh rupee. The total paid up capital is 1 crore. So I have only 10% rights. That's it. If I have to vote on a particular resolution, so naturally I will have only 10% weightage because my total investment is only 10% of the total paid up capital. So here, generally equity shareholders will be given voting right. That's another feature here. They will have voting rights. When we say voting rights, if any resolution comes up, maybe regarding the appointment of chartered accountants, maybe regarding establishing one more factory or diversification of product or reaching out to a new market, all such things generally needs approval from the shareholders, and equity shareholders will have the voting right here. These are simple features. Just write it in one sentence in your examination. Equity share is the capital of the business divided into small equal parts having a definite face value. Come to its features. It's an important source of business finance. It's a long-term source. So it's a permanent one, will not be paid back till the liquidation of the company. So there is no fixed dividend for equity shareholders is paid or no such interest is paid. So there is no preferential treatment, no preference is given to them. So generally holding a equity share indicates the ownership. Next one, these equity shareholders will have a limited liability to the extent of the capital contributed by them. Next one, generally equity shareholders will have voting rights. These are simple features. If you remember these features, based on this, we can just write what are the merits and demerits. Now what I'll do here, just look at these and let us identify a few merits. What are the merits here? First merit, you need not to pay any fixed dividend or interest. That's one of the merits. So mobilize the funds through equity shareholders. Now the company or the business will have the burden that you have to pay them interest regularly, you have to pay them dividend regularly. No. If the company makes profit, it may pay dividend. If the company doesn't make good profits, they may not pay dividend. That's an advantage here. Come to next one, there is something known as limited liability. So here, equity shareholders only have a limited liability. That's another advantage. So a single person or a single body will not be dominating the business. So they'll have a limited liability. That's another advantage. Come to next one, you have one more merit or advantage, voting rights. This indicates a democratic form of running the business. That's another advantage here. Come to next one, equity shares are long-term sources. So you have mobilized the funds and you can forget it for some time. So if you take a short-term loan or a very short-term loan, business will be bothered by that. You may have to pay interest, and after some days or some months again you have to think how to mobilize the funds to repay that. Whereas in this case it's no, you have mobilized the funds for a long term, so business can run smoothly without much worrying about the capital mobilized. Next one, it's a permanent source. Business need not to worry that I have to repay this after 5 years, 3 years, 8 years. No, nothing. Till the time the company is in existence, these equity shares will be there. So naturally company need not to repay that. So one more headache is reduced. So next one, generally for these equity shares, no assets are charged. So here, whenever you take a loan from a bank, we need to pledge. There is something known as collateral security. No person gives you loan without pledging something, without some collateral security. Whereas in this case, you have mobilized the funds without any charge on the business. So each and every shareholder is a owner and he has to contribute to the development of the company. So naturally everybody is a owner. If business makes profit, everybody will get dividend and everybody gets a share in the profit. If business incurs losses, naturally they will not be getting any profits or dividends. So here, these are few simple merits or advantages we have. Let's try to list it out. What are the merits of the equity shares as a source of business finance? Merits or advantages. So just list out that. A simple merits we have. First one is it's a permanent source of business finance. So here you need not to worry much. I had to repay it after some years, some months, some days. No, nothing. It's a permanent source. That's an advantage here. Next one, it's a long-term business finance. You need not to worry again. It's not a short-term one, a few days, months and years. No, it's a long-term one. So that's another advantage here. Next one, no such fixed dividend to be paid. That again reduces the burden on the business. You need not to pay a fixed amount of interest or dividend for the equity shareholders every time. That reduces the burden here. And whenever any company has equity shares mobilized, naturally its credit worthiness in the market goes up. That's another advantage here. Go to next one. If you remember, I said it is limited liability. That's another merit or advantage we have. So we will have a democratic form of management because every shareholder will have a voting right. So these are a few merits of equity shares. So we are studying about the methods of raising business finance, So we started with the first one, shares. There are two types of shares, equity and preference. We have come to equity shares. So what is meant by equity share? What are its features? And we have studied what are its merits. Come to next one, the last part. Again, when it comes to merits, so please do not write it in paragraph format. Simple 5 or 6 sentences. You can number them even point wise. These are the simple merits of mobilizing the business finance in the form of equity shares. In the same way, we have certain demerits even, or disadvantages. What are the disadvantages or demerits we have? First one, mobilizing funds through equity shares involves a huge procedure. You have to take the approval from SEBI, you have to take the approval from Registrar of Companies, you have to register that, you have to appoint a merchant banker. So there are many things involved in that. So it's a very huge procedure involving too many organizations. That's why we call it as a very lengthy and time consuming procedure. Next one, even it involves a huge amount of cost also. Before starting the business itself, you have to invest a huge amount in mobilizing these funds because it involves a huge procedure even. That's another disadvantage. So go to next one. In case if additional equity shares are issued, after some time, business wants some more funds for the sake of business. If additional equity shares are issued, naturally the voting powers get diluted. As the number of shares increases, number of shareholders increases, the voting rights of every equity shareholder goes on decreases. That's another demerit we have. So go to next one. Other major disadvantages, there is no fixed dividend. So here, when we teach this, students will have a doubt. Sir, you have written no fixed dividend in merits also, in demerits also. Now come to this word, no fixed dividend. When we talk about merits, we were talking from the business point of view. When you need not to pay any interest, when you need not to pay any fixed dividend, it's an advantage for the business because burden is reduced. But when you come from the investor's point of view, that's a demerit to the investor. I have invested money, but I am not sure how much returns I am going to get from that. That's a disadvantage or demerit for the investor. I think you have understood. When we are talking about merits, from the company's or business point of view, it's advantageous because it need not to pay any fixed dividend or interest. Whereas when it comes to demerits, it is disadvantage from the investor point of view because investor will not get any fixed dividend or interest. Come to next one. If company is incurring losses, if business is incurring losses in a few years, if it is not performing up to the expected level, what happens? Investors will start selling the shares in the market. Naturally, that reduces its name and fame. That's another disadvantage with the equity shareholding. If it is not paying dividend regularly, if it is not performing, business is not performing up to the expectations, automatically the investors will lose interest and they will start selling the shares in the open market. That reduces the name and fame of the company. These are a few demerits of having equity shares or mobilizing business funds through equity shares. So again, simple, there are about 4 to 5 points which you need to write it in simple sentences. So totally, if you remember, what are equity share? A definition will fetch you 1 mark easily. Features, we had written 6 or 7 features. Just write about 4 to 5 features in simple sentences. Then come to merits. When you write the features itself, it's very easy. If you look at the features, you can point out 4 or 5 merits or advantages. And making use of the same features even, we can even list out disadvantages or demerits also. So that completes the first part. We are studying the methods of raising business finance. In that we have started with the shares. Shares are of 2 types, equity and preference shares. So we have completed the equity shares part. It should be a simple 5 mark question. What are equity shares? explain the merits and demerits. So you can mention a few lines about features, then you can start with merits and demerits. So we have finished equity shares. Now let us start with preference shares. So we are studying the methods of raising business finance. In that we have started with the first one, shares. Shares are mainly of two types, equity shares and preference shares. So we are done with equity shares. Generally it should be a 5-mark question in examination. What is meant by equity share? Explain its merits and demerits or advantages and disadvantages. Then come to the second type of share, the preference shares. So here, from your examination point of view, question what you can get here is, what are preference shares? Explain the types of preference shares. That's it. It should be a 5 marks question. So let us start with the first part in this, meaning. What is meant by a preference share? The name itself clearly suggests preference. Preference is given to this shareholder. Preference is, importance is given to this shareholder in terms of what? That's a question. In terms of dividend and in terms of repaying the capital. In both the cases, preference will be given to the shareholders of preference shares. Now the definition runs like this. Preference shares are shares which have a preference while paying the dividend over the general equity shareholders, and will also have preference while repaying the capital when the company is being wound up. So in both the cases, when the company is alive, while paying the dividend, preference shareholders are given a preference, and when company is winding up, so in that case, while repaying the capital also, preference shareholders are given preference over the general equity shareholders. So that is what is the simple meaning. So preference shares are a type of share which gets the preference when company is alive in terms of paying dividend, and when company is being winding up, they are given preference even in repaying the capital also, known as preference shares. So simple definition of one sentence. Then in your 5 marks question, you will be asked to mention the different types of preference shares. So come to the first one. So we have cumulative preference shares and non-cumulative preference shares. What is meant by cumulative? Means you can add, you can carry forward, that is cumulative. For example, a company has accepted to pay a small amount, a minimum amount of percentage of dividend every year to the preference shareholders. Now let us say a company says preference shareholders will be getting 5% of dividend every year, and it is declared for the year 2015. Company says it is declared. But when it comes to the payment of the dividend, company may find it difficult. It may be lacking sources or funds to pay the dividend. All these cumulative preference shareholders will have the right to carry forward this to next year. That is, in 2015-16, company declared the dividend, that is minimum dividend of 5%, but did not pay due to shortage of funds. In 2016-17, the cumulative preference shareholders will have the right to claim it. They can accumulate that to next year. So in preference shares, we have a type known as cumulative preference shares, where such type of shareholders have the right to carry forward the undistributed profit or dividend to next year. Whereas in case of non-cumulative preference shares, so company, if it declares a dividend, it has to be paid in the same financial year, and these people will not have the right to carry forward it to next year. If the company could not pay due to the non-availability or shortage of funds, the non-cumulative preference shareholders does not have the right to carry to next year. That's the first type of preference shares we have, cumulative and non-cumulative. Come to next one, we have something known as participative and non-participative. Participative preference shares and non-participative preference shares. So when I say participative preference shares, so all these participative preference shareholders will have the right, along with the fixed dividend to them every year, they do have the right to participate with the dividend declared to equity shareholders. Already they are getting preference in their dividend. Whatever the dividend declared by the company, these people will have a preference. Along with that, when the company declares dividend to equity shareholders, general equity shareholders, these people can take part in that. They do have the share in that also. So such type of preference shares are known as participative preference shares. Whereas the non-participative, the name itself clearly says, whatever the preference shares dividend is declared, only they get that. They don't take part or they don't get any dividend declared to general equity shareholders. That's another type of preference shares we have. Next one, we have something known as convertible preference shares and non-convertible preference shares. The name clearly says convertible. Preference shares are convertible to what? Preference shares are convertible to equity shares. So convertible preference shares are those preference shares which can be converted into equity shares after some years. Whereas non-convertible, these preference shares can never be converted into equity shares. So that's one more type. Come to next one. We have one more type of preference shares known as redeemable and non-redeemable preference shares. Again, the English word redeemable, which you can take it back. So redeemable preference shares, that is, you can give it to company back and get your money. That is redeemable. After some years, you can convert your preference shares into cash. Non-redeemable clearly says which you cannot convert them into cash. But after an amendment was made to Companies Act in 1988, so it has been completely abolished. Business or companies have been prohibited from issuing non-redeemable preference shares. Now whatever the preference shares that are issued by the companies, they are redeemable preference shares. So this should be a 5-mark question in your examination. What are preference shares? This is the shares which generally have a preference when the company is alive in terms of payment of dividend and repayment of capital when the company is being winding. So is known as preference shares. So these shareholders will get the preference in terms of getting the dividend. In case companies being wound up, in that case also in repayment of capital, they will have the preference. Come to simple 4 types: cumulative, non-cumulative. So preference shareholders will have some fixed amount of minimum dividend every year declared. So cumulative preference shareholders, in case the company runs out of money, shortage of funds, if it doesn't pay the dividend this year, these cumulative preference shareholders have the right to carry it forward to next year, whereas non-cumulative preference shareholders doesn't have any right to carry it to next year. Participative, non-participative. Participative preference shareholders, along with their dividend, the preference dividend, they can even participate in the dividend declared to general equity shareholders, whereas non-participative will get only the dividend declared to preference shareholders. Convertible preference shares, which can be converted into general equity shares. Non-convertible preference shares cannot be converted into general equity shares. Redeemable, the preference shares which can be redeemed for cash. Non-redeemable, which cannot be redeemed for cash. Whereas after the amendment to Companies Act in 1988, this non-redeemable preference share system has been completely abolished in India. So this is about preference shares. You can just get either 1-mark question, what is meant by preference shares, or maybe a 5-mark question, what is meant by preference share, explain the different types. That's it. So come to next part. We'll come to the debentures. We have finished with shares now. We'll come to debentures now. So come to second method of raising capital is debentures. One word you need to remember along with debentures is this. DEB. It's a debt. Debenture is a debt. Remember that in your mind. Based on that, it's very easy to define. What is a debenture? So debenture is an instrument. Acknowledging the debt by the company and issued to general public is known as debenture. Whenever company is in need of money, sometimes, so it may issue debentures. It's an instrument which says, I am taking so much amount of loan from such and such person, debt. So ನೀವು ಕಂಪನಿಗೆ ಸಾಲ ಕೊಡ್ತೀರಾ, ಅದನ್ನ ಸಾಲ ಪತ್ರ ಅಂತ ಕರಿತೀವಿ ಡಿಬೆಂಚರ್ನ. ಫಾರ್ ಎಕ್ಸಾಂಪಲ್, ಯಾವುದೊಂದು ಕಂಪನಿಗೆ ಒಂದು 10 ಲಕ್ಷ ರೂಪಾಯಿ ದುಡ್ಡು ಬೇಕಾಗುತ್ತೆ ತಕ್ಷಣಕ್ಕೆ. ಸೊ ಅವ್ರೇನ್ ಮಾಡ್ತಾರೆ, 10,000 ರೂಪಾಯಿ ಒಂದಷ್ಟು ಪ್ರತಿಯೊಂದು ಡಿಬೆಂಚರ್ ವಿತ್ ಅ ಫೇಸ್ ವ್ಯಾಲ್ಯೂ ಆಫ್ 10,000 rupees. ಸೊ 10,000ದಂಗೆ ಸುಮಾರು ಒಂದು 100 ಡಿಬೆಂಚರ್ನ ಬಿಡುಗಡೆ ಮಾಡ್ತಾರೆ. ಸೊ ಅವ್ರೇನ್ ಹೇಳ್ತಾರೆ, ನಮ್ಮ ಸಾಲ ಪತ್ರದ ಮುಖ ಬೆಲೆ 10,000 ರೂಪಾಯಿ ಇದೆ. ಸೊ ಅದನ್ನ ನಾವು ಬಿಡುಗಡೆ ಮಾಡ್ತಾ ಇದ್ವಿ, ಯಾರು ಬೇಕಾದ್ರೂ ಖರೀದಿ ಮಾಡ್ಬೋದು. ಈ ಸಾಲ ಪತ್ರಕ್ಕೆ ಮೆಚುರಿಟಿ ಪೀರಿಯಡ್ 5 ವರ್ಷ ಇರುತ್ತೆ. ಹಾಗೂ ಪ್ರತಿ ವರ್ಷ ನಾವು ಈ ಸಾಲ ಪತ್ರದ ಮೇಲೆ 10.5% ಬಡ್ಡಿ ಕೊಡ್ತೀವಿ ಅಂತ ಒಂದು ಪೇಪರ್ ಮೇಲೆ, ಒಂದು ಬಾಂಡ್ ಪೇಪರ್ ಮೇಲೆ ಬರೆದು ಇಶ್ಯೂ ಮಾಡ್ತಾರೆ ಅಷ್ಟೇ. ಸೊ ಸಾಲ ಪತ್ರ ಅಂದ್ರೆ ಏನು ದೊಡ್ಡ ಇದಲ್ಲ ಅದು. ಇಟ್ಸ್ ಅ ನಾರ್ಮಲ್ ಸರ್ಟಿಫಿಕೇಟ್, ಅನ್ ಇನ್ಸ್ಟ್ರೂಮೆಂಟ್ ವಿಚ್ ಸೇಸ್, so this much amount of money has been taken as loan from such and such person for so many years or such a period of time, and we promise to pay this much rate of interest every year to them. So ಇದೊಂದು ಸಾಲ ಪತ್ರ, ಇದು ಡಿಬೆಂಚರ್. ಸೊ ಕಂಪನಿಗಳಿಗೆ, ಬಿಸ್ನೆಸ್ಗಳಿಗೆ, ಸಾಮಾನ್ಯವಾಗಿ ದುಡ್ಡು ಬೇಕಾದಾಗ, this is also a method of raising the fund, issuing the debentures. So meaning should be a 1-mark question in your examination. So debentures are the instrument acknowledging the debt issued by a company to the general public is known as debenture. Come to next one. If it's a 5-mark question, along with your definition, what are debentures, explain the different types of debentures, should be a simple 5-mark question. Come to different types, like your preference shares, even we have about 4 to 5 types of debentures here. First one is secured debentures and unsecured debentures. What do you mean by secured? Security. ಕಂಪನಿಗೆ ನೀವು ಸಾಲ ಕೊಡ್ತಾ ಇದ್ದೀರಾ, ಕಂಪನಿಗೆ ದುಡ್ಡು ಬೇಕಿತ್ತು, ಸೊ ನೀವು ಅವ್ರಿಗೆ ಸಾಲ ಕೊಡ್ತಾ ಇದ್ದೀರಾ. ಗ್ಯಾರಂಟಿ ಏನು? ಕಂಪನಿ ಅಕಸ್ಮಾತ್ ಮುಚ್ಚೋದ್ರೆ ನಿಮಗೆ ದುಡ್ಡು ಬರುತ್ತೋ ಇಲ್ವೋ, ನಿಮಗೆ ಗ್ಯಾರಂಟಿ ಏನು ಕೊಡ್ತಾರೆ? ಅದಕ್ಕೆ sometimes companies issue secured debentures where some assets of the company will be charged. ಸೊ 10 ಲಕ್ಷ ರೂಪಾಯಿ ದುಡ್ಡು ಬೇಕಾಗಿತ್ತು ಕಂಪನಿಗೆ, 10 ಲಕ್ಷ ರೂಪಾಯಿಗೆ ಸಾಲ ಪತ್ರನ ಬಿಡುಗಡೆ ಮಾಡ್ತಾರೆ. ಆ ಸಾಲ ಪತ್ರಕ್ಕೆ ಒಂದು ಗ್ಯಾರಂಟಿ ಕೊಡ್ತಾರೆ. ಯಶವಂತಪುರದಲ್ಲಿರೋ ನಮ್ಮ ಫ್ಯಾಕ್ಟ್ರಿನ ಈ ಸಾಲ ಪತ್ರಕ್ಕೆ ನಾವು ಅಟ್ಯಾಚ್ ಮಾಡ್ತಾ ಇದೀವಿ, ಮಾರ್ಟ್ಗೇಜ್. ನಾಳೆ ಬೆಳಗ್ಗೆ ಅಕಸ್ಮಾತ್ ಕಂಪನಿ ಮುಚ್ಚೋಗ್ತಾ ಇದೆ, ದುಡ್ಡಿಲ್ಲ 10 ಲಕ್ಷ ರೂಪಾಯಿ ಕೊಡ್ಲಿಕ್ಕೆ ವಾಪಸ್ ಅಂದ್ರೆ, ಯಶವಂತಪುರದಲ್ಲಿರೋ ಫ್ಯಾಕ್ಟ್ರಿನ ಮಾರಿ ಆದ್ರೆ ಸರಿ ಅವ್ರು ದುಡ್ಡು ಕೊಡ್ತಾರೆ. ಸೊ their assets are being charged to that. So debentures for which a company's assets will be charged are known as secured debentures. Exactly opposite, unsecured. They are very risky. Without any security, without any charge to the assets of the company, they issue debentures. ನೀವು ಒಂದು ಪ್ರಶ್ನೆ ಕೇಳ್ಬೋದು, ಸರ್ ಆ ಥರ ಡಿಬೆಂಚರ್ಸ್ ಬಿಡ್ತಾರ ಮಾರ್ಕೆಟ್ಗೆ, ಜನ ಅದನ್ನ ತಗೊಳ್ತಾರಾ? ಅದು ಪ್ರಶ್ನೆ. ಇವಾಗ ಆ ಥರ ಸಾಕಷ್ಟು ಡಿಬೆಂಚರ್ಗಳನ್ನ ಮಾರ್ಕೆಟ್ಗೆ ಬಿಡ್ತಾರೆ, ಅದನ್ನ ತಗೊಳ್ತಾರೆ ಕೂಡ ಜನ. ಫಾರ್ ಎಕ್ಸಾಂಪಲ್, ನಾನು ಯಾವ್ದೊಂದು ಕಂಪನಿ ಶುರು ಮಾಡ್ತೀನಿ, ನಾನು ಅನ್ಸೆಕ್ಯೂರ್ಡ್ ಡಿಬೆಂಚರ್ ಬಿಟ್ರೆ, ವಿನಯ್ ಕುಮಾರ್ ಅಂಡ್ ಕೋ ರಿಲೀಸಸ್ ಸಮ್ ಅನ್ಸೆಕ್ಯೂರ್ಡ್ ಡಿಬೆಂಚರ್ಸ್, ಯಾರು ತಗೊಳ್ಳೋದಿಲ್ಲ ಅದನ್ನ. ನಾನು ಯಾರು ಅಂತಾನು ಗೊತ್ತಿಲ್ಲ, ನಾನು ಏನ್ ಬಿಸ್ನೆಸ್ ಮಾಡ್ತಾ ಇದ್ದೀನಿ ಅಂತಾನು ಗೊತ್ತಿಲ್ಲ. ಆದ್ರೆ ಆ ವೆಲ್ ರೆಪ್ಯೂಟೆಡ್ ಕಂಪನಿ, ಎಸ್ಟಾಬ್ಲಿಷ್ಡ್ ಕಂಪನಿ, ರಿಲಯನ್ಸ್ ಇಂಡಸ್ಟ್ರೀಸ್, ಮುಖೇಶ್ ಅಂಬಾನಿ ಹೇಳ್ತಾರೆ 100 ಕೋಟಿ ರೂಪಾಯಿ ನಾವು ಅನ್ಸೆಕ್ಯೂರ್ಡ್ ಡಿಬೆಂಚರ್ಸ್ ಬಿಡ್ತೀವಿ, ಜನ ಕ್ಯೂ ನಿಂತ್ಕೊಳ್ತಾರೆ, ಬೆಳಗ್ಗೆ 4 ಗಂಟೆಗೆ ಹೋಗಿ ತಗೊಳ್ತಾರೆ ಅದನ್ನ. ನಾಳೆ ನಾರಾಯಣ್ ಮೂರ್ತಿ ಅವರು ಅಥವಾ ದಿಲೀಪ್ ಸಾಂಗ್ವಿ ಯಾರಾದ್ರು ಬಂದು ಹೇಳ್ತಾರೆ, ನಾವೊಂದು 1000 ಕೋಟಿಗೆ ಅನ್ಸೆಕ್ಯೂರ್ಡ್ ಡಿಬೆಂಚರ್ಸ್ ಬಿಡ್ತೀವಿ, ನಮಗೆ ದುಡ್ಡು ಬೇಕಾಗಿದೆ. ಜನ ಮುಗಿಬಿದ್ದು ಕೊಂಡ್ಕೊಳ್ತಾರೆ ಅದನ್ನ. ಸೊ ಅನ್ಸೆಕ್ಯೂರ್ಡ್ ಡಿಬೆಂಚರ್ಸ್ ಆರ್ ರಿಲೀಸ್ಡ್ ಈವನ್ ಟುಡೇ. ಇಫ್ ಕಂಪನಿ ಹ್ಯಾಸ್ ಅ ಗುಡ್ ರೆಪ್ಯುಟೇಷನ್, ಪೀಪಲ್ ಸಬ್ಸ್ಕ್ರೈಬ್ ಟು ಇಟ್, ಅದರ್ವೈಸ್ ನೋ. Whereas secured debentures are more safe when compared to unsecured debentures. So go to next one. There is something known as registered debentures and unregistered debentures. Registered debentures. ಸಾಲ ಪತ್ರನ ಕೊಡ್ತಾ ಇದ್ದಾರೆ ನಿಮ್ಗೆ, ಅದನ್ನ ರಿಜಿಸ್ಟರ್ ಮಾಡ್ತಾರೆ. ಎಲ್ಲಿ ರಿಜಿಸ್ಟರ್ ಮಾಡಿರ್ತಾರೆ? ಕಂಪನಿಯ ಡಿಬೆಂಚರ್ ಬುಕ್ ನಲ್ಲಿ ಅದನ್ನ ರಿಜಿಸ್ಟರ್ ಮಾಡಿರ್ತಾರೆ. ನಿಮ್ಮ ಸಾಲ ಪತ್ರಕ್ಕೆ ಒಂದು ಸಂಖ್ಯೆ ಇರುತ್ತೆ, ಆ ಸಂಖ್ಯೆನ ಬರ್ದಿರ್ತಾರೆ. 0031 ಈ ಸಾಲ ಪತ್ರನ ವಿನಯ್ ಕುಮಾರ್ಗೆ ಕೊಟ್ಟಿದೀವಿ, ಕಂಪನಿ ರಿಜಿಸ್ಟರ್ ಡಿಬೆಂಚರ್ ರಿಜಿಸ್ಟರ್ ನಲ್ಲಿ ನನ್ನ ಹೆಸರು ಆ ನಂಬರ್ ಇರುತ್ತೆ ಅದರಲ್ಲಿ. ಸೊ ರಿಜಿಸ್ಟರ್ಡ್ ಡಿಬೆಂಚರ್ಸ್ ಆರ್ ದೋಸ್ ಡಿಬೆಂಚರ್ಸ್ ವಿಚ್ ಆರ್ ಎಂಟರ್ಡ್ ಇನ್ ದ ಡಿಬೆಂಚರ್ ರಿಜಿಸ್ಟರ್ಸ್ ಆಫ್ ದ ಕಂಪನಿ. So here come to next one. Unregistered debentures are bearer debentures, we call it as, which are not registered in the books of the company. So ಇದನ್ನ ರಿಜಿಸ್ಟರ್ಡ್ ಡಿಬೆಂಚರ್ ನ ನೀವು ಸೇಲ್ ಮಾಡಬೇಕಾದ್ರೆ ಸೇಲ್ ಡೀಡ್ ಮಾಡಿ ಅದನ್ನ ಮತ್ತೊಬ್ಬರಿಗೆ ನೀವು ವರ್ಗಾವಣೆ ಮಾಡಬೇಕು. ಫಾರ್ ಎಕ್ಸಾಂಪಲ್, ನಾನು ರಿಜಿಸ್ಟರ್ಡ್ ಡಿಬೆಂಚರ್ ತಗೊಂಡ್ರೆ ಈಗ ನಾನು ಮನೆ ಹೇಗ್ ಮಾಡ್ತೀನಿ ಕ್ರಯ ಪತ್ರ ಇಟ್ಕೊಂಡು, ಅದೇ ರೀತಿ ಇದನ್ನ ಕೂಡ ಸೇಲ್ ಡೀಡ್ ಮಾಡಿಸಿನೇ ಸೇಲ್ ಮಾಡ್ಬೇಕು ನೀವು. ಅನ್ರಿಜಿಸ್ಟರ್ಡ್ ಆ ಬೇರರ್ ಡಿಬೆಂಚರ್ ಆತರ ಏನು ಇಲ್ಲ. ಕೆಳಗಡೆ ನೀವೊಂದು ಸೈನ್ ಮಾಡಿ ಯಾರಿಗೆ ಕೊಡ್ತೀರಾ ಅವ್ರದೇ ಆಗುತ್ತದು, ಅವರು ಮತ್ತೊಬ್ಬರಿಗೆ ಮತ್ತೊಂದು ಸೈನ್ ಮಾಡಿ ಟ್ರಾನ್ಸ್ಫರ್ ಮಾಡ್ಬೋದು. ಕಡೆಗೆ ಯಾರ ಕೈಲಿರುತ್ತೋ ಆ ವ್ಯಕ್ತಿನೇ ಅದಕ್ಕೆ ಓನರ್. ಸೊ ಇಲ್ಲಿ ಯಾರ ಹೆಸರಾಗ್ಲಿ ಅಥವಾ ಡಿಬೆಂಚರ್ ಸಂಖ್ಯೆ ಆಗ್ಲಿ ಡಿಬೆಂಚರ್ ಪುಸ್ತಕದಲ್ಲಿ ಎಂಟರ್ ಆಗಿರೋದಿಲ್ಲ. ಸೊ ದಟ್ ಈಸ್ ರಿಜಿಸ್ಟರ್ಡ್ ಅಂಡ್ unregistered debenture we have. We also call unregistered as bearer debentures. That is, the transferring is very easy. It doesn't bear any particular name. Person who holds it becomes the owner, and just by signing across and handing over to somebody transfers the ownership of such debentures. So come to third one, we have convertible and non-convertible debentures. Again, just like your preference shares, convertible, all those debenture certificates which can be converted into equity shares after the maturity period or specified period are known as convertible debentures. All those debentures which cannot be converted into equity shares is known as non-convertible debentures. And go to last one, redeemable and irredeemable debentures. The name clearly says debentures which can be converted into cash or after a specific period or maturity period. So the time expires, so these debentures can be converted into cash. So whereas irredeemable debentures which cannot be converted into cash is known as irredeemable. Again, after the amendment to Companies Act in 1988, the companies have been prohibited from issuing irredeemable debentures in India. Again, come to the examination point of view, debentures, maybe a 1-mark question. What are debentures? So debentures are the instruments acknowledging the debt issued by a company to general public is known as debenture. So remember that word, debentures are debt certificates. ನಾವು ಸಾಲ ಕೊಡ್ತಾ ಇದೀವಿ ಕಂಪನಿಗೆ, ಅವರು ಅದಕ್ಕೆ ನಮಗೆ ಸಾಲ ಪತ್ರನ ಕೊಡ್ತಾರೆ. ಸೊ ಕೆಲವು ವರ್ಷಗಳ ನಂತರ, ಎಷ್ಟು ವರ್ಷ ಅಂತ ಅದ್ರ ಮೇಲೆ ಬರ್ದಿರುತ್ತೆ, ಅದಾದ್ಮೇಲೆ ಆ ಸಾಲ ಪತ್ರನ ವಾಪಸ್ ಕೊಟ್ಟು ದುಡ್ಡನ್ನ ಇಸ್ಕೋಬಹುದು. ಅಲ್ಲಿ ತನಕ ಅವರು ಹೇಳಿದಷ್ಟು ಬಡ್ಡಿಯನ್ನ ಕೊಡ್ತಾ ಇರ್ತಾರೆ ವರ್ಷ ವರ್ಷ. ಸೊ ವಿ ಹ್ಯಾವ್ ಟೈಪ್ಸ್ ಆಫ್ ಡಿಬೆಂಚರ್ಸ್, ಸೆಕ್ಯೂರ್ಡ್ ಅಂಡ್ ಅನ್ಸೆಕ್ಯೂರ್ಡ್. ನಿಮ್ಮ ಸೆಕ್ಯೂರ್ಡ್ ಡಿಬೆಂಚರ್ಸ್ಗೆ ಯಾವ್ದಾದ್ರು ಒಂದು ಆಸ್ತಿಯನ್ನ ಅವರು ಅದಕ್ಕೆ ಮುಡಿಪಾಗಿಟ್ಟಿರ್ತಾರೆ ಆ ಸಾಲ ಪತ್ರಕ್ಕೆ. Unsecured, where the assets of the company is not charged for these debentures, whereas in case of secured debentures, the assets of the company will be charged. So here, registered, ಯಾವ ಸಾಲ ಪತ್ರಗಳನ್ನ ಕಂಪನಿ ತನ್ನ ಡಿಬೆಂಚರ್ ರಿಜಿಸ್ಟರ್ ನಲ್ಲಿ ಎಂಟರ್ ಮಾಡಿರುತ್ತೆ ಅದನ್ನ ರಿಜಿಸ್ಟರ್ಡ್ ಅಂತ ಕರಿತೀವಿ. ಅದನ್ನ ನೀವು ಮತ್ತೊಬ್ಬರಿಗೆ ವರ್ಗಾವಣೆ ಮಾಡ್ಬೇಕಂದ್ರೆ ಸೇಲ್ ಡೀಡ್, ಕ್ರಯ ಪತ್ರದ ಮೂಲಕನೇ ವರ್ಗಾವಣೆ ಮಾಡಬೇಕು. whereas unregistered or bearer debentures ಅಂತ ಕರಿತೀವಿ. ಅದನ್ನ ಸಾಮಾನ್ಯವಾಗಿ ಕಂಪನಿ ತನ್ನ ಡಿಬೆಂಚರ್ ರಿಜಿಸ್ಟರ್ ನಲ್ಲಿ ಎಂಟರ್ ಮಾಡಿರೋದಿಲ್ಲ, ಯಾರ ಹೆಸರನ್ನ ಎಂಟರ್ ಮಾಡಿರೋದಿಲ್ಲ. ಬೇರೆ ಡಿಬೆಂಚರ್ಸ್ ಯಾರ ಕೈನಲ್ಲಿ ಇರುತ್ತೆ ಅವರೇ ಅದಕ್ಕೆ ಮಾಲೀಕರು. ಅದನ್ನ ಸೈನ್ ಮಾಡಿ ನೀವು ಟ್ರಾನ್ಸ್ಫರ್ ಮಾಡ್ತಾ ಹೋಗ್ಬೋದು. ಸೊ ಟ್ರಾನ್ಸ್ಫರಿಂಗ್ ಆಫ್ ಓನರ್ಶಿಪ್ ಆಫ್ ಬೇರೆ ಡಿಬೆಂಚರ್ಸ್ ಆರ್ ಈಸಿ, whereas transferring the ownership of registered debentures are little difficult. You need to follow a particular procedure. Convertible, non-convertible, which can be converted into equity shares, are known as convertible debentures. Non-convertible, which cannot be converted into equity shares. Redeemable, ಯಾವ್ದನ್ನ ನೀವು ಮತ್ತೆ ಎಷ್ಟೋ ಒಂದು ವರ್ಷಗಳಾದ ನಂತರ, ಅದರಲ್ಲಿ ಎಷ್ಟು ವರ್ಷ ಅಂತ ಹೇಳಿರ್ತಾರೆ, ಅಷ್ಟು ವರ್ಷಗಳ ನಂತರ ನೀವು ಅದನ್ನ ಕಂಪನಿಗೆ ಕೊಟ್ಟು ಸಾಲಪತ್ರನ ದುಡ್ಡನ್ನ ಮರಳಿ ಪಡಿಬಹುದು. Irredeemable, so which you cannot sell or which you cannot redeem for money after a specified period or whatever it is. But as of now, issuing of irredeemable debentures have been abolished in India. So we are studying the different methods of raising the business finance. We started with shares, equity shares and preference shares. Then we have come to debentures. Come to next one, retained earnings. The third type of raising the business finance is retained earnings. What are retained earnings? So ಸಾಮಾನ್ಯವಾಗಿ ಯಾವುದೇ ಒಂದು ಬಿಸ್ನೆಸ್ ಶುರು ಆದ್ಮೇಲೆ ಸ್ಟಾರ್ಟಿಂಗ್ ನಲ್ಲಿ ಸ್ವಲ್ಪ ಲಾಸ್ ಆಗ್ಬೋದು ಅಥವಾ ಲಾಭ ಮಾಡದೇ ಇರಬಹುದು. ಅದು ಸರ್ವೇ ಸಾಮಾನ್ಯ. ಅದು ಕೆಲವಾರು ತಿಂಗಳುಗಳಾದ್ಮೇಲೆ ವರ್ಷಗಳಾದ್ಮೇಲೆ ಬಿಸ್ನೆಸ್ ನಲ್ಲಿ ಪ್ರಾಫಿಟ್ ಬರುತ್ತೆ. ಸೊ ಎವ್ರಿ ಕಂಪನಿ ವಿಲ್ ಸ್ಟಾರ್ಟ್ ಅರ್ನಿಂಗ್ ಸಮ್ ಅಮೌಂಟ್ ಆಫ್ ಪ್ರಾಫಿಟ್. ಸೊ ಹೂ ಇಸ್ ದ ಓನರ್ ಫಾರ್ ದೀಸ್ ಪ್ರಾಫಿಟ್ಸ್? ಜನರಲಿ ಈಕ್ವಿಟಿ ಶೇರ್ ಹೋಲ್ಡರ್ಸ್, ದೇ ಆರ್ ದ ಓನರ್ಸ್. ಸೊ ಈ ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ಗೆ ಡಿವಿಡೆಂಡ್ಸ್ ಕೊಡಬೇಕಾಗುತ್ತೆ. So they are the owners of the company and they have limited liability to the extent of the capital they have subscribed to. They have to be paid dividend. So what are dividends? It is the share in the profit earned by the company. Now the question comes, will the company distribute all its profits among its shareholders in the form of dividend? No. May not be. No. Companies need not to distribute entire profits among its shareholders as dividends. Every company may have its own dividend policy, but generally some part of the profit will be retained with the company itself. We call this as retained earnings. And why do they retain it? For the sake of future. Sorry, ಮುಂದೆ ಮತ್ತೆ ಬಿಸ್ನೆಸ್ ನ ಎಕ್ಸ್ಪ್ಯಾಂಡ್ ಮಾಡ್ಬೇಕಂತ ಆಸೆ ಇರುತ್ತೆ. ಅದಕ್ಕೋಸ್ಕರ ಅವ್ರು ಏನ್ ಮಾಡ್ತಾರೆ, ಸೊ ತಾವು ದುಡ್ದಿರೋ ಪ್ರಾಫಿಟ್ ನಲ್ಲಿ ಕಂಪನಿ ಏನ್ ಪ್ರಾಫಿಟ್ ಮಾಡುತ್ತೆ ಅದರಲ್ಲಿ ಒಂದು ಭಾಗವನ್ನ ಶೇರ್ ಹೋಲ್ಡರ್ಸ್ಗೆ ಡಿವಿಡೆಂಡ್ ಆಗಿ ಕೊಡ್ತಾರೆ, ಇನ್ನೊಂದು ಭಾಗವನ್ನ ತನ್ನ ಭವಿಷ್ಯಕ್ಕೆ ಮುಂದೆ ತಾನೇ ಇನ್ನೊಂದು ಯಾವುದೋ ಬೇರೆ ದೇಶದಲ್ಲಿ ಒಂದು ಕಂಪನಿ ಶುರು ಮಾಡಬೇಕು ಅಂತನೋ ಅಥವಾ ನಮ್ಮ ದೇಶದಲ್ಲೇ ಇನ್ನು ಹಲವಾರು ರಾಜ್ಯಗಳಿಗೆ ನಮ್ಮ ಪ್ರಾಡಕ್ಟ್ ನಾವು ಮಾರಬೇಕು ಅಂತನೋ ಆ ಒಂದು ಉದ್ದೇಶ ಇಟ್ಕೊಂಡು ತನ್ನ ಭವಿಷ್ಯಕ್ಕೋಸ್ಕರ, ಫ್ಯೂಚರ್ಗೋಸ್ಕರ ಒಂದು ಸ್ವಲ್ಪ ಪ್ರಾಫಿಟ್ ನ ಹಾಗೆ ಉಳಿಸ್ಕೊಳ್ಳೋದು. ಸೊ ವಿ ಕಾಲ್ ದಟ್ ಆಸ್ ರಿಟೈನ್ಡ್ ಅರ್ನಿಂಗ್ಸ್. A part of the profit retained by the company for its future purpose is known as retained earnings. ಸಾಮಾನ್ಯವಾಗಿ ಎಲ್ಲ ಕಂಪನಿಗಳು ಈ ಒಂದು ಸಿಸ್ಟಮ್ ಅನ್ನ ಫಾಲೋ ಮಾಡುತ್ತೆ. ಯಾಕೆಂದ್ರೆ ಬೇರೆ ಸಾಲ ತಗೊಳ್ಳೋ ಬದಲು ಅಥವಾ ಮತ್ತೆ ಈಕ್ವಿಟಿ ಶೇರ್ ರೈಸ್ ಮಾಡೋ ಬದಲು ಇದೊಂದು ಸುಲಭದ ವಿಧಾನ, ಇದು ದುಡ್ಡನ್ನ ಮೊಬಿಲೈಸ್ ಮಾಡೋದಕ್ಕೆ. Then come to next one, public deposits. ನೀವು ಸಾಮಾನ್ಯವಾಗಿ ಬ್ಯಾಂಕ್ ನಲ್ಲಿ ಕೇಳಿರ್ತೀರ ಫಿಕ್ಸ್ ಡೆಪಾಸಿಟ್, ರೆಕರಿಂಗ್ ಡೆಪಾಸಿಟ್ ಅಂತ ಹೇಳಿ ಟೈಪ್ಸ್ ಆಫ್ ಅಕೌಂಟ್ಸ್ ಓದಿರ್ತೀರ ನಿಮ್ಮ ಬಿಸ್ನೆಸ್ ಸ್ಟಡೀಸ್ ಅಲ್ಲಿ. ಸೊ ಪಬ್ಲಿಕ್ ಡೆಪಾಸಿಟ್, ಈ ಕಂಪನಿಗಳು ಕೂಡ ಬ್ಯಾಂಕ್ ರೀತಿನಲ್ಲೇ ಡೆಪಾಸಿಟ್ ಅನ್ನು ತಗೊಳ್ತಾರೆ, ಫಿಕ್ಸ್ ಡೆಪಾಸಿಟ್. ಸೊ ಹಿಯರ್ ದೇರ್ ಆರ್ ಸರ್ಟೆನ್ ಕಂಡೀಷನ್ಸ್. ನಾವು ಫಸ್ಟ್ ಒನ್, these public deposits, the deposits accepted by the company from the general public is guided by the RBI norms. Even though we have Companies Act to regulate the affairs of the company, when it comes to accepting of public deposits, company has to adhere to the norms issued by Reserve Bank of India. So here Reserve Bank of India says companies cannot accept FDs for more than 3 years. ನೀವು ಬ್ಯಾಂಕ್ ನಲ್ಲಿ 5 ವರ್ಷ 10 ವರ್ಷಕ್ಕೆ ಬೇಕಾದ್ರೆ FD ಇಡಬಹುದು. ನೀವು 120 ತಿಂಗಳ ತನಕ FD ಇರಬಹುದು. 10 ವರ್ಷ ತನಕ ಆರ್ ಡಿ ಓಪನ್ ಮಾಡ್ಬೋದು. ಕಂಪನಿಗಳಲ್ಲಿ ಆರ್ ಡಿ ಇರೋದಿಲ್ಲ, ಎಫ್ ಡಿ ಮಾತ್ರ ಇರುತ್ತೆ. ಟರ್ಮ್ ಡೆಪಾಸಿಟ್ ಅಂತ ಕರೀತಾರೆ ಅದನ್ನ. 3 ವರ್ಷಕ್ಕಿಂತ ಹೆಚ್ಚಿಗೆ ಅವರು ಸಾಮಾನ್ಯವಾಗಿ ಎಫ್ ಡಿ ನ ತಗೊಳ್ಳೋದಕ್ಕೆ ಆರ್ ಬಿ ಐ ಪರ್ಮಿಟ್ ಮಾಡಲ್ಲ. ಮತ್ತೆ ಎಷ್ಟು ದುಡ್ಡನ್ನು ಅವರು ಜನರಿಂದ ತಗೋಬಹುದು ಡೆಪಾಸಿಟ್ ರೂಪದಲ್ಲಿ, ಅದಕ್ಕೂ ಕೂಡ ಒಂದು ಮಿತಿ ಹಾಕಿದ್ದಾರೆ ಆರ್ ಬಿ ಐನವರು. ದ ಟೋಟಲ್ ಪಬ್ಲಿಕ್ ಡೆಪಾಸಿಟ್ should not exceed, it should not be more than 25% of the paid up capital and the reserves of the company. 1 ಕೋಟಿ ರೂಪಾಯಿ ಅವರ ಪೇಯ್ಡ್ ಅಪ್ ಕ್ಯಾಪಿಟಲ್ ಇದೆ, ಮತ್ತೆ ಓವರ್ ಅ ಪೀರಿಯಡ್ ಆಫ್ ಟೈಮ್ ಸುಮಾರು ಒಂದು 50 ಲಕ್ಷ ರೂಪಾಯಿ ಅವರು ರಿಸರ್ವ್ ಅಂದ್ರೆ ತಮ್ಮ ಪ್ರಾಫಿಟ್ ಎಲ್ಲ ಕೂಡಿ ಇಟ್ಟಿದ್ದಾರೆ, ಎತ್ತಿಟ್ಟಿದ್ದಾರೆ. ಅಂದ್ರೆ 1,50,00,000, 1.5 ಕೋಟಿ ಅಷ್ಟು ಅವ್ರ ಹತ್ರ ಪೇಯ್ಡ್ ಅಪ್ ಕ್ಯಾಪಿಟಲ್ ಮತ್ತೆ ರಿಸರ್ವ್ ಇದೆ. ಅವರು 25% ಅದರಲ್ಲಿ ಅಂದ್ರೆ 37.5 ಲಕ್ಷಕ್ಕಿಂತ ಹೆಚ್ಚಿಗೆ ಪಬ್ಲಿಕ್ ಡೆಪಾಸಿಟ್ ನ ಅಕ್ಸೆಪ್ಟ್ ಮಾಡೋ ಹಾಗಿಲ್ಲ. ಸೊ ದಟ್ಸ್ ಅ ರೂಲ್ ಹಿಯರ್. ಸೊ ಜಸ್ಟ್ ಯು ಹ್ಯಾವ್ ಟು ರೈಟ್ 2 or 3 sentences. Public deposit, the time deposits accepted by a company from the general public is known as public deposit, and these are guided by the RBI norms. In India, companies cannot accept public deposits for more than 3 years, and the total amount of public deposit should not exceed 25% of the paid up capital and the reserves available with the company. And even with respect to rate of interest also, RBI fixes the ceiling from time to time. ಯಾವುದೊಂದು ರೇಟ್ ಹೇಳುತ್ತೆ 8 ರಿಂದ 16%, ಅದಕ್ಕಿಂತ ಜಾಸ್ತಿ ನೀವು ಕೊಡೋ ಹಾಗಿಲ್ಲ. ಏನಾಗುತ್ತೆ ಅಂದ್ರೆ ಅದಕ್ಕಿಂತ ಜಾಸ್ತಿ ಕೊಟ್ಟಾಗ ಜನರಿಗೆ ಮೋಸ ಆಗೋ ಸಾಧ್ಯತೆಗಳು ಜಾಸ್ತಿ ಇರುತ್ತೆ. ಅದರಿಂದ RBI ಅದನ್ನ ಕೂಡ ಲಿಮಿಟ್ ಮಾಡುತ್ತೆ, ಇಷ್ಟೇ ಬಡ್ಡಿಯನ್ನ ಕೊಡಬೇಕು, ಇದಕ್ಕಿಂತ ಜಾಸ್ತಿ ಕೊಡೋ ಹಾಗಿಲ್ಲ. ಅದೇ ರೀತಿ ಜನರಿಗೆ ಎಚ್ಚರಿಕೆನೂ ಕೊಡ್ತಾ ಇರುತ್ತೆ RBI, ದಯವಿಟ್ಟು ಹೆಚ್ಚಿಗೆ ಬಡ್ಡಿ ಕೊಡುವಂತ ಕಂಪನಿಗಳಲ್ಲಿ ಅಥವಾ ಹೆಚ್ಚಿಗೆ ಬಡ್ಡಿ ಕೊಡ್ತೀವಿ 2 ವರ್ಷ 3 ವರ್ಷದಲ್ಲಿ ಡಬಲ್ ಮಾಡ್ತೀವಿ ಅಂತ ಆಸೆ ಹುಟ್ಟಿಸುವಂತ ಕಂಪನಿಗಳಲ್ಲಿ ದಯವಿಟ್ಟು ದುಡ್ಡನ್ನ ಹಾಕಬೇಡಿ ಅಂತ RBIನವರು ಆಗಾಗ ಜನಸಾಮಾನ್ಯರಿಗೆ ಎಚ್ಚರಿಕೆ ಕೂಡ ಕೊಡ್ತಾ ಇರ್ತಾರೆ. ಸೊ ಪಬ್ಲಿಕ್ ಡೆಪಾಸಿಟ್ಸ್ ಆರ್ ರೆಗ್ಯುಲೇಟೆಡ್ ಬೈ RBI norms. That's other way of raising the funds. So come to next one, we have loans. This is again one of the major method of raising funds by these companies. Now generally we classify loans under 2 headings: loans from commercial banks, next loan from specialized financial institutions. ಏನಿವೆರಡಕ್ಕೂ ವ್ಯತ್ಯಾಸ? Generally commercial banks provide loans to business for short and medium term. ಸಾಮಾನ್ಯವಾಗಿ ಕಮರ್ಷಿಯಲ್ ಬ್ಯಾಂಕ್ನವರು ಲಾಂಗ್ ಟರ್ಮ್ ಅಂದ್ರೆ 10, 15, 20 ವರ್ಷಗಳಿಗೆ ಬಿಸ್ನೆಸ್ಗೆ ಸಾಲ ಕೊಡೋದಿಲ್ಲ. ಅವರು ಸಾಮಾನ್ಯವಾಗಿ ಕೆಲವು ದಿನಗಳಿಗೆ, ನಿಮ್ಮ ಓವರ್ ಡ್ರಾಫ್ಟ್ ಫೆಸಿಲಿಟಿ ಹಲವಾರು ದಿನಗಳಿಗಿರುತ್ತೆ. ಸೊ ಕ್ಯಾಶ್ ಕ್ರೆಡಿಟ್ ಕೆಲವು ತಿಂಗಳುಗಳಿಗಿರುತ್ತೆ, ಟರ್ಮ್ ಕ್ರೆಡಿಟ್ 2 ವರ್ಷ 3 ವರ್ಷ ಆ ತರ ಇರುತ್ತೆ ಹೊರತು 10, 15, 20 ವರ್ಷಕ್ಕೆಲ್ಲ ಕಮರ್ಷಿಯಲ್ ಬ್ಯಾಂಕ್ ಅವರು ಸಾಲ ಕೊಡೋದಿಲ್ಲ. Whereas there are certain specialized institutions established for that purpose which provides long and medium term loans to business. 5 ವರ್ಷ 7 ವರ್ಷ 10 ವರ್ಷ 15 ಕೆಲವು ಸಲ 20, 25 ವರ್ಷ ತನಕ ಕೂಡ ಸಾಲ ಕೊಡ್ತಾರೆ ಸ್ಪೆಷಲೈಸ್ ಇನ್ಸ್ಟಿಟ್ಯೂಷನ್ಸ್. ಸೊ ಮೊದಲನೇದಕ್ಕೆ ಬರೋಣ. ನೀವು ಎಕ್ಸಾಮ್ ನಲ್ಲಿ ಬರೆಯುವಾಗ ಅಕಸ್ಮಾತ್ ಇದು ಎಕ್ಸ್ಪ್ಲೇನ್ ದ ಮೆಥಡ್ಸ್ ಆಫ್ ರೈಸಿಂಗ್ ದ ಬಿಸ್ನೆಸ್ ಫೈನಾನ್ಸ್ 10 ನಂಬರಿಗೆ ಕೊಟ್ಟರು ನೀವು ಅಂದಾಗ ಇದಿಷ್ಟು ಹೆಡ್ಡಿಂಗ್ ನ ನೆನ್ಪಿಟ್ಕೊಳ್ಬೇಕು. ಶೇರ್ಸ್, 2 types of shares, equity, preference ಬರೀಬೇಕು. ಪ್ರಿಫರೆನ್ಸ್ ಅಲ್ಲಿ ಟೈಪ್ಸ್ ಆಫ್ ಪ್ರಿಫರೆನ್ಸ್ ಶೇರ್ಸ್ ನ ನೀವು ಬರೀ ಮೆನ್ಷನ್ ಮಾಡಿದ್ರೆ ಸಾಕು, ಎಕ್ಸ್ಪ್ಲೇನ್ ಮಾಡೋದು ಬೇಡ, ಅದು ಸಪರೇಟ್ ಆಗಿ ಬರಲಿಲ್ಲ ಅಂದ್ರೆ. ಸೊ ಡಿಬೆಂಚರ್ಸ್, ವಾಟ್ ಆರ್ ಡಿಬೆಂಚರ್ಸ್ ಡೆಫಿನೇಷನ್ ಬರೀಬೇಕು. ಮತ್ತೆ 4 ತರದ ಡಿಬೆಂಚರ್ಸ್, ಟೈಪ್ಸ್ ಆಫ್ ಡಿಬೆಂಚರ್ಸ್ ಹೇಳಿದೆ ನಾನು, ಅದಕ್ಕೆ ಡೆಫಿನೇಷನ್ ಬರೆದ್ರೆ ಸಾಕು. ರಿಟೈನ್ಡ್ ಅರ್ನಿಂಗ್ಸ್, 2 ಸೆಂಟೆನ್ಸ್. A part of the profit earned by company will be kept with itself for the sake of meeting the future needs known as retained earnings. ಅದಾದ್ಮೇಲೆ ಪಬ್ಲಿಕ್ ಡೆಪಾಸಿಟ್ಸ್ 3 ಅಥವಾ 4 ಸೆಂಟೆನ್ಸ್, ಅದಕ್ಕಿಂತ ಜಾಸ್ತಿ ಬೇಡ. The deposit accepted by the business from the general public is known as public deposit. It is guided by Reserve Bank of India norms. Generally, companies are not permitted to accept FDs for more than 3 years, and the amount of term deposit should not exceed 25% of the paid up capital and reserves of a company. ಮುಗ್ದೋಯ್ತು 4 ಸೆಂಟೆನ್ಸ್. ನೆಕ್ಸ್ಟ್ ಲೋನ್ಸ್ ಬಂದಾಗ ಜನರಲಿ ಬಿಸ್ನೆಸ್ ಮೊಬಿಲೈಸಸ್ ಆರ್ ಟೇಕ್ಸ್ ಅವೈಲ್ಸ್ ಲೋನ್ಸ್ ಫ್ರಮ್ ಕಮರ್ಷಿಯಲ್ ಬ್ಯಾಂಕ್ಸ್ ಅಂಡ್ ಸ್ಪೆಷಲೈಸ್ಡ್ ಫೈನಾನ್ಷಿಯಲ್ ಇನ್ಸ್ಟಿಟ್ಯೂಷನ್ಸ್. ಕಮರ್ಷಿಯಲ್ ಬ್ಯಾಂಕ್ಸ್ ಜನರಲಿ ಪ್ರೊವೈಡ್ ಶಾರ್ಟ್ ಟರ್ಮ್ ಮೀಡಿಯಂ ಟರ್ಮ್ ಲೋನ್ಸ್, whereas specialized financial institutions provide medium and long term loans. ಈ ಶಾರ್ಟ್ ಟರ್ಮ್ ಲೋನ್ಸ್ ಯಾವುದು ಅಂದ್ರೆ ಮೊದಲನೇದು ನಿಮ್ಮ ಓವರ್ ಡ್ರಾಫ್ಟ್ ಫೆಸಿಲಿಟಿ. ಪ್ರತಿಯೊಂದು ಬಿಸ್ನೆಸ್ ಕಮರ್ಷಿಯಲ್ ಬ್ಯಾಂಕ್ ಜೊತೆಗೆ ಒಂದು ಕರೆಂಟ್ ಅಕೌಂಟ್ ನ ಇಟ್ಕೊಂಡಿರ್ತಾರೆ, ಅದರಲ್ಲಿ ಓವರ್ ಡ್ರಾಫ್ಟ್ ಫೆಸಿಲಿಟಿ ಕೊಡ್ತಾರೆ. OD ಇಸ್ ಅ ಶಾರ್ಟ್ ಟರ್ಮ್ ಒನ್. ಸೊ ವಿ ಹ್ಯಾವ್ ಕ್ಯಾಶ್ ಕ್ರೆಡಿಟ್ಸ್, ವಿ ಹ್ಯಾವ್ ಟರ್ಮ್ ಕ್ರೆಡಿಟ್ಸ್, ಆರ್ ಸಮಟೈಮ್ಸ್ ಈವನ್ ಕಮರ್ಷಿಯಲ್ ಬ್ಯಾಂಕ್ಸ್ ಇಶ್ಯೂ ಲೆಟರ್ಸ್ ಆಫ್ ಕ್ರೆಡಿಟ್. So these are the different types of loans provided by commercial banks to business, and even they do discount the bills of exchange. We'll come to that later. We have a separate part here, bills of exchange. We'll come to that. Come to specialized financial institution which provide for a particular purpose medium and long term loans to industries and business. So there are lot many specialized financial institutions. Just remember a few. We have Industrial Finance Corporation, then we have state financial corporations, then we have Industrial Development Bank of India, then we have ICICI, Industrial Credit and Investment Corporation of India, we have Unit Trust of India, we have LIC, Exim Bank. Just know these names. And IFCI, I forgot this, Industrial Finance Corporation of India. So both central government and state government have set up lot many such specialized financial institutions, including Industrial Finance Corporation of India, IFCI, state financial corporations established by respective states, IDBI, again central government has established that, which has been converted into bank now. ICICI, same, Industrial Credit and Investment Corporation, especially it was established for the sake of providing long and medium term loans to industries and business, but now it has been converted into bank. We have Unit Trust of India, a mutual fund house which provides loans, long-term loans to business. We have Life Insurance Corporation, we have Exim Bank. All these comes under specialized financial institutions which provide medium and long-term loans to business. Come to next part, we have discounting bills of exchange. Sorry, we have trade credit. So trade credits, the name clearly says credit or loan given by one trader to other trader. A businessman lends loan to another businessman. He is known as trade credit. Just one simple line, that's it. A businessman or one company lends loan to other company, a businessman lends loan to other businessman, a trader lends loan to other trader, comes under trade credit. That's also a method of mobilizing funds. Then we have discounting bills of exchange. It's a short term financial accommodation generally adopted by or provided by commercial banks to business people. So bill of exchange. So here generally commercial banks will provide these accommodation to business people by discounting these bills of exchange. So bills of exchange will have short term maturity period. So here the drawee will be paid the amount after deducting some amount as discount, and after the maturity period commercial banks will collect it from the drawer of the bill. In case the bill is dishonored, in that case the commercial bank will recover the amount from the drawee, the person who has discounted, along with the interest. That's a short term financial accommodation provided by commercial banks. And the last one we have internal and external even. We have internal and international. So come to internal methods of raising funds. We have something known as intercorporate deposits, ICD. What is intercorporate? ಒಂದು ಕಂಪನಿ ಮತ್ತೊಂದು ಕಂಪನಿನಲ್ಲಿ ದುಡ್ಡನ್ನ ಡೆಪಾಸಿಟ್ ರೀತಿನಲ್ಲಿ ಇಡ್ತಾರೆ. ಸೊ ನೀವು ಸ್ಕೂಲ್ಗಳಲ್ಲಿ ಕಾಲೇಜ್ಗಳಲ್ಲಿ ಕೇಳ್ತೀರಾ ಇಂಟರ್ ಕಾಲೇಜ್, ಇಂಟರ್ ಕಾಲೇಜಿಯೇಟ್, ಇಂಟರ್ ಸ್ಕೂಲ್. ಸೊ ಬೇರೆ ಬೇರೆ ಸ್ಕೂಲ್ಗಳು ಸೇರಿಯಲ್ಲಿ ಕಾಂಪಿಟೇಷನ್ ಬಂದಿರುತ್ತೆ. ಅದೇ ರೀತಿ ಇಂಟರ್ ಕಾರ್ಪೊರೇಟ್ ಡೆಪಾಸಿಟ್, ಒಂದು ಕಂಪನಿ, ಯಾವುದೋ ಒಂದು ಕಂಪನಿ ABC ಅನ್ನೋ ಒಂದು ಕಂಪನಿ ಒಂದು 10 ಕೋಟಿ ರೂಪಾಯಿನ XYZ ಅನ್ನೋ ಒಂದು ಕಂಪನಿನಲ್ಲಿ ಡೆಪಾಸಿಟ್ ಇಡ್ತಾರೆ. ಸೊ ಹಿಯರ್ ABC will keep the deposit for which XYZ will pay the interest for some amount of, for some particular fixed period. We call this as intercorporate deposit. That's one way of mobilizing the funds. In the same way, we have a few methods of raising funds internationally. We have something known as global depository receipts, then we have American depository receipts, and we have Indian depository receipts. GDR, ADR and IDR. Exam nalli ನೀವು ಇದಕ್ಕೆ just ಒಂದು ಲೈನ್ ಡೆಫಿನೇಷನ್ ನ ಬರೆದ್ರೆ ಸಾಕು. Global depository receipts. What are these receipts? So here, generally global depository receipts are issued by a banker in the world trade markets, a world share market like NASDAQ in New York and all those. So against the equity shares, the general equity shares of a Indian company. ನಮ್ಮ ಭಾರತೀಯ ಕಂಪನಿಗಳ ಈಕ್ವಿಟಿ ಶೇರ್ ಸುಮಾರು ಒಂದು 100 ಈಕ್ವಿಟಿ ಶೇರ್ನ ಒಂದು ಬಂಡಲ್ ಮಾಡಿ ಒಂದು GDR ಅಂತ ಮಾಡ್ತಾರೆ. ಅದನ್ನ ಗ್ಲೋಬಲ್ ಶೇರ್ ಮಾರ್ಕೆಟ್ಸ್ ಅಮೆರಿಕಾನಲ್ಲಿರ್ಬೋದು ಅಥವಾ ಟೋಕಿಯೋ ಜಪಾನ್ನಲ್ಲಿರ್ಬೋದು ಅಥವಾ ಚೈನಾ ಶಾಂಘೈನಲ್ಲಿರ್ಬೋದು ಲಂಡನ್ನಲ್ಲಿರ್ಬೋದು GDRs ಅಂತ ಅದನ್ನ ಸರ್ಕ್ಯುಲೇಟ್ ಮಾಡ್ತಾರೆ. ಸೊ ಇಟ್ ಈಸ್ ಫಾರ್ ದ ಎಂಟೈರ್ ಗ್ಲೋಬಲ್ ಮಾರ್ಕೆಟ್ ಅಂಡ್ ಜನರಲಿ ಇಟ್ ಈಸ್ ಡಾಮಿನೇಟೆಡ್ in terms of dollars or euros. ಆ GDRಗಳನ್ನ ಡಾಲರ್ಸ್, ಯೂರೋಸ್, ಫ್ರಾಂಕ್ಗಳಲ್ಲಿ ರಿಲೀಸ್ ಮಾಡ್ತಾರೆ. So here it is generally charged against the general equities of Indian companies. In the same way, ADRs, it is again issued by the global bankers against the general equity shares of Indian company only in the American share markets. So ADRs are nothing but a bundle of the receipts which are traded in the American share markets issued by a global banker against the general equity shares of the Indian companies. ಭಾರತದ ಕಂಪನಿ ಫಾರ್ ಎಕ್ಸಾಂಪಲ್ ಇನ್ಫೋಸಿಸ್ 100 ಇನ್ಫೋಸಿಸ್ ಶೇರ್ಗಳನ್ನ ಸೇರಿ ಒಂದು ADR ಅಂತ ಮಾಡ್ತಾರೆ. ಇನ್ಫೋಸಿಸ್ ADR ಅಂತ ಮಾಡ್ತಾರೆ. ಇದನ್ನ ನಾಸ್ಡಾಕ್ ನಲ್ಲಿ ಟ್ರೇಡ್ ಮಾಡ್ತಾರೆ. ಯಾವ ಗ್ಲೋಬಲ್ ಬ್ಯಾಂಕ್, ಡ್ಯೂಯಿಶ್ ಬ್ಯಾಂಕ್ ಇರ್ಬೋದು, ಯಾರೊಬ್ಬ ಅದನ್ನ ರಿಲೀಸ್ ಮಾಡಿ ಹೇಗೆ ಇನ್ಫೋಸಿಸ್ ಶೇರ್ಗಳು BSE NSE ನಲ್ಲಿ ಇಂಡಿಯಾನಲ್ಲಿ ಟ್ರೇಡ್ ಆಗುತ್ತೆ, ಅದೇ ರೀತಿ ನಾಸ್ಡಾಕ್ ನಲ್ಲಿ ಇನ್ಫೋಸಿಸ್ ADR ಗಳು ಟ್ರೇಡ್ ಆಗುತ್ತೆ. ನಮ್ಮ ಭಾರತದಲ್ಲಿ ಶೇರ್ ಮಾರ್ಕೆಟ್ ಅಲ್ಲಿ ಇನ್ಫೋಸಿಸ್ ಒಂದೊಂದೇ ಯೂನಿಟ್ ಸೇಲ್ ಆಗುತ್ತೆ, ಆದ್ರೆ ಅಲ್ಲಿ ಒಂದು ಇನ್ಫೋಸಿಸ್ ADR ಅಂದ್ರೆ ಅದರ ಹಿಂದೆ 100 ಇನ್ಫೋಸಿಸ್ ಶೇರ್ಗಳಿರುತ್ತೆ ಇಂಡಿಯಾನಲ್ಲಿ. ಸೊ ದಟ್ಸ್ ವೈ ವಿ ಡಿಫೈನ್ ದಟ್ ADR ಆಸ್ the receipts issued by a global banker against the equities of Indian companies. ಭಾರತದ ಕಂಪನಿಗಳ ಈಕ್ವಿಟಿಗೆ ಸಮನಾಗಿ ಅಲ್ಲಿ ಬೇರೆ ವಿದೇಶಿ ಮಾರುಕಟ್ಟೆಯಲ್ಲಿ ಅದರ ರಸೀದಿಗಳನ್ನ ಬಿಡುಗಡೆ ಮಾಡ್ತಾರೆ. ಅದನ್ನ ADR, GDR ಅಂತ ಹೇಳಿ ಕರಿತೀವಿ ನಾವು. ಕಮ್ ಟು ನೆಕ್ಸ್ಟ್ ಒನ್, IDR. ಇಟ್ಸ್ ಎಕ್ಸಾಕ್ಟ್ಲಿ ಆಪೋಸಿಟ್ ಆಫ್ ದಟ್. ಗ್ಲೋಬಲ್ ಕಂಪನೀಸ್ ಇಂಡಿಯಾಗೆ ಬರುತ್ತೆ ಇಲ್ಲಿ. ಫಾರ್ ಎಕ್ಸಾಂಪಲ್ ನಿಮ್ಮ IBM ಇರ್ಬೋದು, ಯಾವುದು ಜೆನ್ಪ್ಯಾಕ್ಟ್ ಇರ್ಬೋದು. ಫಾರಿನ್ ಕಂಪನಿಗಳು ಇಂಡಿಯಾಗೆ ಬಂದಾಗ ಸೊ ಆ ಗ್ಲೋಬಲ್ ಕಂಪನೀಸ್ ಅವರು ಕೂಡ ತಮ್ಮ ದೇಶದಲ್ಲಿ ಶೇರ್ಗಳನ್ನ ಬಿಡುಗಡೆ ಮಾಡಿರ್ತಾರೆ. ಆ ರೀತಿ ಒಂದು ಶೇರ್ ಬಂಡಲ್ನ ನಮ್ಮ ಭಾರತೀಯ ಬ್ಯಾಂಕ್ಗಳು ಖರೀದಿ ಮಾಡಿ ಅದನ್ನ IDR ಅಂತ ಹೇಳಿ ಇಂಡಿಯಾನಲ್ಲಿ ರಿಲೀಸ್ ಮಾಡ್ತಾರೆ. ಸೊ ADR, GDR ನಲ್ಲಿ ಏನಾಗಿತ್ತು, ಭಾರತೀಯ ಕಂಪನಿಯ ಶೇರ್ಗಳನ್ನ ಬಂಡಲ್ ಮಾಡಿ GDR, ADR ನ ಹೆಸರಿನಲ್ಲಿ ವಿದೇಶದಲ್ಲಿ ಟ್ರೇಡ್ ಮಾಡ್ತಾರೆ. IDR ನ ಹೆಸರಲ್ಲಿ ವಿದೇಶಿ ಕಂಪನಿಗಳನ್ನ ಶೇರ್ಗಳನ್ನ ಬಂಡಲ್ ಮಾಡಿ ಇಂಡಿಯಾನಲ್ಲಿ ಟ್ರೇಡ್ ಮಾಡ್ತಾರೆ. So Indian depository receipts are the receipts issued by Indian bankers registered with SEBI against the general equity shares of foreign companies in India. ವಿದೇಶಿ ಕಂಪನಿಗಳ ಜನರಲ್ ಶೇರ್ಸ್ ನ ಒಂದು ಬಂಡಲ್ ಮಾಡಿ ಆ ಪ್ರತಿಯೊಂದು ಬಂಡಲ್ ನ ರೆಸೀಟ್ ಇಂಡಿಯನ್ ಡೆಪಾಸಿಟರಿ ರೆಸೀಟ್ ಅಂತ ಮಾಡಿ ಒಬ್ಬ ಭಾರತೀಯ ಬ್ಯಾಂಕರ್ ಅದನ್ನ ಭಾರತೀಯ ಷೇರು ಮಾರುಕಟ್ಟೆಯಲ್ಲಿ ಬಿಡುಗಡೆ ಮಾಡ್ತಾನೆ. ಅದನ್ನ IDR ಅಂತ ಕರಿತೀವಿ. So IDRs are the receipts of global companies issued by an Indian banker registered with SEBI in the Indian stock market is known as IDR. So these are the ways of mobilizing the funds through international markets. So we have in the national market or domestic markets we have intercorporate deposits, whereas in the international markets we have GDRs, ADRs and IDRs. So that marks the end of your sources of business finance. Just we'll have a simple recap for 2 minutes and let's see what are the questions which you can expect from this chapter. So which are the 1 mark questions, 2 mark questions, 5 and 10 mark questions. So leave the introduction part, don't expect any questions from here. 1 mark questions, what is meant by business finance should be a 1 mark question. So nature and significance, leave it. Come to sources, you will not get any 1 mark question. Methods of raising business finance, in that what is an equity share, what is a preference share, Both are 1 mark question. What are debentures? 1 mark question. What are retained earnings? 1 mark question. Then expand. If you remember all those specialized financial institutions, expand IFCI, expand IDBI, expand ICICI. All those expansions may come for 1 mark. What is meant by a bill of exchange, or what is meant by discounting a bill of exchange? Both may be 1 mark question. What is a trade credit? 1 mark question. What is meant by GDR? 1 mark question. What is meant by ADR? A 1 mark question. What is intercorporate deposit? What is Indian deposit receipt? These are all 1 mark questions. Come to 2 mark questions. Explain the nature of what is, or state any 3 or 4 features of business finance. Should be a 2 mark question. Mention any 2 importance or significance of business finance. Should be a 2 mark questions. Sources, no 2 mark questions in that. Shares, mention any 2 features of preference shares, or mention any 2 types of preference shares. Mention any 2 merits of equity shares. Mention any 2 demerits of equity shares. Come to debentures. Mention any 2 types of debentures. Is a 2 mark question. Public deposits, no. Loans, no. Then trade credit, no. No, there is no 2 mark question here. Come to 5 mark question. Entire the second part can be a 5 mark question. What is meant by business finance? Explain its nature and significance. A 5 mark question. Explain the different sources of business finance. Maybe a 5 mark question, maybe a 10 mark question. So here you have to be little careful in case if it's a 5 mark question, practical oriented. In your part E, if you get that, just draw a diagram in a landscape format. Draw a diagram or a chart showing that based on time period, based on source of generation, based on ownership. Based on time period, long term, medium term, short term. So based on source of generation, internal, external, based on ownership, owner's fund, borrowed fund. And name a few examples for this. For 5 marks, if that's the case, a practical question, finish it off. Only chart you have to write. If it is a 10 mark question, first write off the chart, because it becomes very easy for you as well as me as an evaluator. It becomes very easy to evaluate. I know that student has written all this. From the next page, start explaining all these. When I say explanation, just write that. In long-term finance, shares are of 2 types, equity, preference. What is equity share? What is preference share? That's the end of it. Next one, debenture. What is a debenture? Types of debenture. Mention it. That's it. So like that, you have to explain what are the different methods of raising finance we have in that chart. Come to last one. This itself is separately a 10 mark question. Explain the different methods of raising business finance. So you have 3, 3, 2. There are 8 things. So here again, loans are of 2 types. Again, issued by commercial banks and by specialized institutions. So just keep explaining them. When I say explanation, shares, meaning of share, types, equity and preference, and what is meant by equity, what is meant by preference, what are the different types of preference shares. That's it. Don't go for merits, demerits. If combinedly, it's a 10 mark question. Debenture. What is meant by debenture? 4 types of debentures. 1 line explanation if you can write. What is meant by retained earnings? What is meant by public deposit? Who regulates that? Remember, it is RBI which regulates that. Next one, for how long maximum a company can accept public deposit? And what is the maximum amount of public deposit it can accept? Simple, 4 sentences. Loans, 2 institutions. One is commercial banks, one is financial institution. Commercial banks generally lend short and medium term. Types of loans lent by commercial banks. You have overdraft facility, cash credit, term credit, then discounting bills of exchange, letters of credit, etc. Then come to medium and long term by specialized financial institution. Just name them: IFCI, IDBI, ICICI, State Financial Corporations, UTI, LIC, Exim Bank, etc. And they provide loans for manufacturing facility, other business, services, export, import, etc. Then what is meant by trade credit? The loan lent by one businessman to other businessman, one company to other company, one trader to other trader is trade credit. Then discounting bills of exchange, a short-term financial accommodation by a commercial bank. Generally, they discount the bills and they pay the money to drawee before its maturity of the bill with some discount. They deduct the discount and they collect it from the drawer of the bill after the maturity period. In case the bill is dishonored, they recover the money from the drawee along with the interest. That's it. 2 or 3 sentences. Internal, write about intercorporate deposits. International, write about GDR, ADR and IDR. 3 simple sentences for that. So that should be a 10-mark question in case. But sometimes you may get a 5-mark question separately. What is meant by share or what is meant by equity share? Explain merits and demerits. That itself is a separate 5-mark question. What are preference shares? Explain the types of preference share. That itself is a 5-mark question. What is a debenture? Explain the types of debenture. That's a 5-mark question. Retained earning, public deposits, loans. In loans, they may ask for specialized financial institution. Mention the different financial institutions which provide loans in India, long-term loans in India. You have to mention about 7 or 8 financial institutions, when they were established and what is their motto. In trade credit, you may not get bills of exchange, maybe a 2-mark question. Yeah, you don't get any 5-mark question. Whereas these can be separately a 5-mark question even. So that marks the end of your chapter, Sources of Business Finance.